Okay, traders, today is Thursday, February 14th. Happy Valentine's Day for you traders who celebrate Valentine's Day. Today is February 14th, 2013. It is Thursday. It is middle of the day. It's about 1:50 p.m. in the afternoon, getting towards the afternoon session here. And I thought we'd go over a few charts because I found some very interesting things on these charts that I think we all need to share with one another to see what's going to happen over the next few days. As we know, futures trading can be extremely risky and cause substantial financial loss, and it's not suitable for all trading accounts. You know, you have to use stops. If you don't understand stops are your best friend, you probably are broke by now and shouldn't be doing this anyway. But for you traders that know stops need to be put in, let's look at these markets. 30-year T-bonds on Thursday afternoon, February 14th. This is a daily bar chart. In the last video I left you OMNI with, I basically said, hey, parallel channels, unleash the power of the parallel channel. This is Oscar's gift to you. And that was in our last video. Well, these parallel channels, all of which you'll see in today's video, are probably charts that were in the video from the other day, are really working out well. From the day that we did the video of the parallel channels, we were right here in bonds. Bonds dropped for 2 straight days, turned around and came right back to the parallel channel, once again in familiar territory. Now, what has happened every time we've gotten near this line or hit it is the market has done a tailspin. Look, I mean, no denying what happens in bonds when you hit the top of this parallel channel. It's kind of a giveaway trade. So here we are at the top of this parallel channel. Now, bonds are one of the markets that I have been slowly calling top on for the last couple of months. As you know, OMNI, about 2 or 3 months ago, started looking at the top in bonds and looking at the possibility that the top is in dollars. And I'm here to say once again that OMNI has absolutely called the top in bonds. And I meant to say the top in gold, not dollars. My apologies. I meant to say the top in bonds and the top in gold. That's what OMNI was looking at over the last couple of months and almost officially now has said the top is in on both. It's trading from the short side. OMNI has been putting OMNI recommendations out for gold and bonds, trading them from the short side on days where it looks smart. I believe very much that the bonds are going down now and will continue in that path because the stock market is going to continue higher. Now, looking at this bond chart, we are in this parallel channel, right? But did you notice that these are all bear flags on the way down? Look, here's your flagpole. Here's your bear flag. Goes right to the top of the channel and breaks into a flagpole. Here's your bear flag. Goes right to the top of the channel and breaks. Let me just fix this bear flag for you. Okay, and then we have this one. This is an interesting flag. The pole comes to about here. This flag sort of flattens out a little bit. Nonetheless, you still have a bear flag. You can put this any way you want it. You can put it down here. You can put it up here. You can turn it and move it this way. You know, there's a lot of ways to put this if you want. The idea is that another flag has been formed, and you just hit the top of this line, and that's where we are now. So the bonds have shown us that it is acting like a market, bear flags dropping inside of a parallel channel that wants to go lower. Now, bonds was a risk-on market. When the stock market was crashing, bonds were rallying big time. Bonds look like they are topping out now, and that's what I have been telling you in video after video, and now OMNI's starting to sell the bonds. Let's go look at the gold market. Traders, this should be a chart that all of us have seen. I've shown this to you in several videos and in a couple of classes and have posted this on Chart Upload. And here is what the gold is doing. Another, what used to be when it was really risky and everyone was afraid of the stock market, you went and bought gold, you went and bought bonds. That is what you did. There was nothing else that you could have done about it. Right? Everybody's money went to bonds, everybody's money went to gold, and that's the way it worked out. Well, here we are now, 5 years later, and I say that bonds have topped and gold has topped, and here's another one of the many reasons. You are now putting together multiple head and shoulder patterns, whether they are inverted like this one or upright like the rest of them. Inverted head and shoulders, upright head and shoulders, upright head and shoulders, upright head and shoulders. All of them happening inside of a parallel channel. Now we have this bear flag. I showed this bear flag to the room last night when it looked like this. I said, look, traders, on top of that, we have a bear flag. Omni pulls a short for gold last night. We include Thursday's trading now. Wednesday night, Omni goes short. Here's Thursday's trading. Boom. Very nice drop. Bear flag works very, very well. Round of applause for the bear flag. And once again, technical analysis firing on all 8 cylinders. Look at how it is starting to fail miserably now that we are below the 200 bar moving average. So those are some of the markets that you would expect to go up if the stock market was going to crash again. Instead, they are giving pattern after pattern that they want to go lower, and the whole thing itself looks like a topping pattern. So gold, Omni has been selling. Bonds, Omni has been selling. Gold acting like a bear market lately. Maybe the top isn't in, who knows? But for now, as day traders, we'll take the multiple head and shoulders and the parallel channel working towards the downside, coupled with the bear flag and the bearish Omni, and we'll call gold bearish for now. So that's the gold and the bonds, the 2 markets that certainly do go up when the S&P goes down, and usually vice versa. S&P starts to have a major rally, the gold and bonds start to go down. Let's look at more markets here. Traders, the emini S&P daily bar chart. Remember the inverted head and shoulders? I showed this to each and every one of you. And we literally drew this in, which didn't exist. We drew this in together. It did not exist, this parallel channel. And look at how well it has maintained inside the channel. You tighten that up a little, and you can see that this is a wonderful, once again, another wonderful parallel channel. Great, great inverted head and shoulders. Now we are steeped in this channel. Obviously, this channel goes higher. You can see this black one here. If we just take the black one and give it a different color, you can see how far it goes. This channel is looking good. You can easily stay inside this channel for quite some time. You pull it in a little bit like this, and here you are. Staying inside the channel, we just hit the bottom, or just about hit the bottom. The next move is the top. S&P looking fantastic here. Let's move along. Let's just keep working chart after chart. Traders, next on the board will be your NASDAQ. NASDAQ has the same old inverted head and shoulders, but because it's more of an apple slave called NAPLDAQ than it is an index that's willing to free float, and Apple has such a hold on it, it had to do a head test of the head and shoulders before it took off. But it did the head test, and what the head test turns into really is a bull flag pole. These 2 days, here's your flag pole. Big bull flag, small bull flag inside of the bull flag. This is where NASDAQ goes next. NASDAQ is on its way. It's breaking out of a big bull flag with a smaller bull flag. It's got bonds moving lower. It's got gold moving lower. The Omni's pointing up. Everything about this is bullish. Then, if you want to tighten this up a little bit, you might recognize that the whole darn thing is really one big inverted head and shoulders. This is one bullish looking market along with the other indices. So there is your NASDAQ and your S&P. Let's do a quick look at the Russell. So here's your Russell, the Russell 2000 daily bar chart. Look at this parallel channel. I mean, talk about unleashing the power of these parallel channels. My goodness, this is just wonderful stuff. So here is now your Russell. I mean, what's going to stop the Russell right now? It doesn't look like it wants to stop anytime soon. I'm assuming that this is becoming some new steep channel that's building, and it wants to go higher until it hits the 2 channels right here. That brings us to 930. Happens to be Omni's projection for today, 930. In a different way, Omni doesn't look at this. It didn't look at this. That was Omni's projection for today. Let's see what happens. It looks like it could get there in a day or 2 according to the chart. But again, just to show you how bullish these indices are right now, then even currencies. Look at these parallel channels and bear flags, how well they work. Bull flag, market rallies, hits the top of this parallel channel. Look at this. Bang, and just stops cold. Comes back down to the bottom of the parallel channel, puts in a bear flag. This very same bear flag, by the way, I showed you traders last night, and that was before this bar was in. If you recall, I put this out in the room last night, in the trading room, and said, look, traders, bear flag in the euro. Looks like a bear flag to me. And here's what happens next. Wow. And you are inside of, or just broke out of, this channel. See how well parallel channels work? I find them amazing, traders. I think we should continue keeping our eyes on this. And remember, right now we are steeped in this parallel channel, and it is not going away anytime soon. This is your E-mini S&P daily bar chart. We remain in buy the dips mode unless somehow this channel gets violated and we stay below it for several days on end. Until then, we continue buying the dips. Traders, thank you so much for coming to today's class. I hope this class will help to keep you in tune with where markets are going. And remember your parallel channels. At all times, keep your stops in. And remember, traders, stops are in. Emotions are out. Thank you for coming, and I will see you in the trading rooms. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.